Hi, everyone, and welcome to today's webinar, Sales Tax Compliance 101. My name is Ashley, and I'll be your host today. We are covering where and when you have sales tax obligations, how to calculate sales tax rates accurately, recent legislative updates, and reviewing rules surrounding exemption certificates today. But before we dive into that, I just have a couple housekeeping items. First, a friendly reminder that Avalara cannot provide legal or tax advice. On your screen is our safe harbor policy. Please take a moment to review that while I continue with some additional housekeeping. We are recording today's event, so if you want to listen to it again or share it with a colleague, you'll receive the recording later today. The console you're looking at can be customized. Feel free to move or resize the windows. The slides can be resized by dragging the bottom corner, or you can download the PDF slide deck under additional resources. That additional resources also contains some related resources that you might want to check out. There are several ways to engage with the presenter today and your fellow attendees. So first, if you have any questions, you can submit them using the Ask a Question box. We will save time for Q&A at the end. You may also submit your webinar troubleshooting questions there. Second, you can join our attendee group chat. There's an icon along the bottom of your screen with 2 chat bubbles, and if you click that, the chat will appear. So we encourage you to introduce yourself, network, and discuss today's topic. So to kick off the conversation, you can drop in where you're calling in from today. I'm calling in from Iowa. Third, you can react to the presentation by clicking the emoji icon, and our presenter on the back end can see your live feedback from those emojis. And then if you have any technical issues, there's a question mark icon at the box with suggestions, or you can reach out using the Ask a Question box, and I'll try and help you out. We are offering 1 CPE credit for today's presentation. For those looking to receive CPE credit, please note that we will ask you to respond to 3 of our 4 poll questions. The poll question will pop up on your screen for a limited amount of time, so please make sure you're ready to answer when it appears. Please do not split or tile screens on your computer, as this can affect the placement of the poll question. Also, the webinar platform may not render correctly on mobile, so please try and get to a desktop if you can. You must also attend the full 50-minute duration of this webinar. And once you have met those requirements, your certificate will be able to download in the Earn Certification box on your screen. You'll click the icon to access, and it will open in a new tab. Your certificate will also be in a post-event email later today if you don't have a chance to download it during the webinar. Unfortunately, we are unable to provide CPE credit to those who have technology issues that prevent them from qualifying. If you do experience an issue, please reach out as soon as possible using the Ask a Question box so we can document that issue. All right, let's meet today's presenter. We are joined by Ken Davis, Senior Product Solutions Manager at Avalara. Ken, can you tell us a little about yourself?
Absolutely. Hi there, Ashley. Thank you, everyone, and welcome. My name is Ken Davis. I'm located in Seattle, Washington, and I've actually worked for Avalara in July. Actually, will be at 12 years, so much more longer than just the 10 years there. I love food, love travel, and I also am a doodle lover. I have 2 doodles. I have a micro mini golden doodle and a labradoodle, Coco and Max, and they are my little fur babies. So yeah, so looking forward to chatting with you today.
Thanks, Ken. I love that. Personally, I have a Shih Tzu Bichon mix, so
okay.
Love the little lap dogs.
Yes.
All right, let's kick off with the first CPE poll question. So that should be on your screen now. If it is not, or you don't see the slides advancing and matching up with what we're saying, just refresh your screen real quick and it should solve the problem. So the first CPE poll question is, how does your business currently manage sales tax? We have several options there for you. You can select the ones that apply and then hit submit to record your answer for this first CPE poll question. And we do have quite a few slides to get through today, so we are not going to show the responses or talk through the responses of the poll questions today. So with that, I will pass it over to Ken to get us started.
Awesome. All right, everyone. So today, this is our agenda that we're going to be working through. There are really kind of five key areas we're going to be spending time discussing today. First, why sales tax matters. Second, sales tax basics. Third, when to collect, got nexus. Uh, Fourth, the 5 steps of managing sales tax compliance. And then finally, tips to streamline sales tax management. Okay. All right, so let's get started here. So, uh, why does sales tax matter? Um, Sales tax matters because it really matters to the states. The states are the ones that actually govern all of the sales tax laws, sales tax rules, and ultimately the sales tax rate. Um, it's really their decision, their authority to really dictate those laws and rules. And they also basically have it set up where you have a pass-through tax. So part of the rules are that the seller will collect the sales tax directly from the consumer and then remit it back to the taxing jurisdiction, um, which will actually own those dollars. And those dollars are really important. Some of the research we've done has shown that in 22 states, more than a quarter of their annual revenue from tax collections comes from sales tax. So sales tax is pretty important to the state's revenue and bottom line and their budgets. Now let's take a look at a map here. I thought this was a really great map because it really just describes just how reliant states are on collecting sales tax. As you can see on the map, you have states that are in white. There are several states within the US that actually do not have a sales tax. And then it starts to go up from there, from that light blue all the way up to the orange color you see on the map. I know I'm in the state of Washington, and I see that 30 to 40% of our state's dollars, or sales tax dollars, are important to our state's budget and economy. So, it's really interesting to see that. Had no idea sales tax really accounted for that much. So, take a look at the map and look at what's your state, how reliant is your state on those sales tax dollars. Okay. All right, moving on here. All right, so on to our next topic, sales tax basics. Okay, so when we think about sales tax, really there are kind of three kind of key ingredients that we look at from the standpoint of what's really taxable in a state, or even non-taxable. And the things that we look at are the where. So what is the where, or what is the ship from and ship to address? Where is that product being shipped to? If it's not to your location, maybe is it being shipped to a construction site, a different location? Where is that product being consumed? Um, all of those types of questions need to be asked to really help determine that if that product or service is taxable in a given state. The second is the who. So who is the seller? Who is the buyer? And of that who, are there any nuances there? Does the buyer have an exemption certificate that says, I do not pay sales tax in a given state, and here is my certificate to prove it. So who becomes a critical piece as well. And then the third is the what. So what is actually being sold, right? Is it a tangible personal property piece? Is it a good? Is it service? Is it software? What is it that's being sold? So those are really kind of the three key ingredients around that. Now let's take a look at just taking a step further to really look at some of the variances that we're seeing today. So it used to be that really the states really just looked at sort of physical presence, a physical good that's being shipped to a state as being what they look at as taxable. But today, most states tax some services, but a few tax many services. So now we're getting a little more complication into the taxability here. As you can see, there are certain states that really have a broad sort of approach to how they look at services from a tax law and tax rule perspective. And then you have some that are really more narrowly focused. Um, in general, what's taxable are tangible personal property. Goods and services. Goods are pretty much always taxable. But the variances come when you start to look at services. In some states, services are taxable, some states they are not. Software, in some states it's taxable, some states it's not. So when it comes to, say, software, and this is one that's really growing as we look at how folks are actually having products delivered to them, some states have even a reduced rate from a software perspective. So the whole notion of that, you thought you knew that only your product or your tangible personal property or good was taxable. That you need to start thinking about it in a different way when it comes to the services that you're providing. On that, let's look at this map. This map is a great representation of what are the actual sales tax rates in the states across the U.S. Again, you've got those states where there's no sales tax whatsoever, and then you have some, as the colors get a little bit bolder from the light blue to the dark blue, you'll see that that rate goes up. So I'm not sure what your experience is, but I live in Seattle, Washington. And while this shows that the rates are 9% plus, I can tell you based on my location and where I shop the most often, usually that rate is around 10.35. So understanding exactly where you're located really does make a difference as far as capturing the correct sales tax rate. Okay. All right. And then just to finish up the notion of why it really matters to the states, because the states do control the sales tax laws and rules, they've actually made it a statutory requirement. And I know that that poses challenges for many of our customers or folks that we talk to on a regular basis. But it is a statutory requirement once you do become registered or you have an obligation there. Um, the other challenges that many are faced with are that the rates and rules are in constant flux. Every single month, there is potential for a rule or rate to change in a state. So, having to keep track of all those changes and those rules is also a challenge. And then the other piece is, all of this activity that you spend really trying to ensure that you're being compliant. Unfortunately, those are 100% non-revenue generating activities. And so, you're spending a fair amount of time, keeping track of all the laws, keeping track of all the rules, collecting, remitting the tax. And in essence, it's really not revenue generating. So, a lot of folks we talk to say, it would be so nice if we could not have to spend as much time on this and have our folks spending time on, really projects that are going to be revenue generating. All right. All right. So moving on, I like this slide, got Nexus, when to collect. So, now that the states are the ones that really are controlling the tax laws and the tax rules. But, the question comes, how do I know when I need to collect tax? And so it really comes down to a term called nexus. And nexus really, by definition means that you have a connection or a link to something. When we think about sales tax nexus, that definition broadens a bit, and it really means that you have a connection between a taxing jurisdiction and an entity or a business, right? So that's really, just from a basic starting place, you have to have nexus there to help you make that determination when you need to get collect or when you need to collect that tax. If you don't have a connection to that state, then you really should not worry about collecting sales tax. You don't have an obligation until you actually have that connection. Okay. So speaking of nexus and that connection, if you will, the states really have set today really about five key types of nexus that they deem as being generating the obligation to have a connection to their state. The first one is physical nexus. So that one, most of you are probably familiar with. Physical nexus is really just referring to you have a physical presence there, right? So you have an office there, you have a warehouse where you are storing your products there. You may have an employee that lives in a given state. If any of those conditions or scenarios fit into your business model, then you have physical nexus there, and the states would say you should register to collect tax there, sales tax there. The second is what's known as economic nexus. Economic nexus is based solely on sales activity. So when we say sales activity, specifically the amount of sales invoices or transactions you have that are being consumed or shipped to that state, the amount of gross receipts for sales activity within that state. So simply based on that notion, the states would say that you have economic nexus. We're going to see in just a few minutes that each state has created economic thresholds. Those thresholds are really sort of those key triggers, those key sort of dollar amounts or number of invoices that you would use to make that determination. The third is click-through nexus. And really, click-through nexus is really, think of it as just as a referral type agent. So perhaps you have a website or you have a partner or you're part of an organization and they are promoting your business on their website. If customers are clicking through to get to you, you have click-through nexus in that state where your partner or where that organization lives. So that's something that you want to keep in mind. The other type is affiliate nexus. An affiliate nexus is really, it relates a lot of times to remote retailers. So you may have a business that has an owner that owns multiple businesses in different states. And so just because your business is not located in, say a neighboring state, that owner may have another business in that state. So by nature of that, you have an affiliate nexus. The final one is what's known as marketplace nexus. And this one is has become really popular in the last, say, 5 years or so. And it really has to do with sellers that are utilizing a marketplace facilitator like Amazon, as an example. So if you're selling your goods and services using a marketplace, using that marketplace infrastructure for their website, their payment systems, billing, you now have nexus in that state by nature of working with that marketplace. Now, what the states have done with marketplaces today is that they have basically set up a rule where those marketplaces need to collect and remit the sales tax on your behalf to the states. So a little bit of nuance there, but by nature of you selling through that marketplace, you now have nexus there. Okay. All right, now let's take a look at a few activities really that would basically create a physical nexus. Some of these, it may seem pretty obvious to you, right? You've got multiple locations in a state. You own or lease real property, right? Those are pretty common understandings. But the others that kind of are a little bit nuanced or maybe may not be familiar with are things like trade shows. So attending a trade show, you have a booth at a trade show, you're having meetings with customers at that trade show, you're selling your goods and services at that trade show. For some states, that is a nexus generating activity. The other one that a lot of customers don't always think about are investors. So if you're an investor or a board member within an organization and you don't have nexus in that state today, um, your presence related to being a member of that board could actually deem physical nexus as well. This is just a partial list. Every state, again, creates their own tax laws and tax rules. So again, it's important that you are making yourself as familiar as possible with all of those rules and that occur within a state. Okay, and that leads us to talking to more discussion about economic nexus. So with economic nexus, there was a Supreme Court ruling between South Dakota and a company called Wayfair. This was on June 21st of 2018. And really what occurred here is that the state of South Dakota really decided that because Wayfair was a business that shipped goods into their state, that they felt like the laws around physical nexus should be expanded to out of state sellers now. And as a result of that case, um, the Supreme Court ruled with South Dakota and agreed with that. And so once that Supreme Court ruling was done, all the other states saw that there was an opportunity to expand their definition of nexus, and thus we have economic nexus today. And today, all 45 states with a sales tax have adopted economic nexus. Okay, so now let's take a look at just really a state map to kind of look at some of the different thresholds. I mentioned before that for economic nexus, the states will define certain thresholds. And so what we're seeing here, as we look at the map, again, we have those states that don't have nexus, but we're seeing that there are thresholds ranging from 100,000 up to 500,000 in gross receipts. We also see that there are some states that have a transaction threshold, 100 transactions. So in New York, as an example, New York has a threshold that is 500,000 in gross receipts and 100 transactions. In some states, that can be an and or an or. In Connecticut, you've got just specifically gross receipts at 100,000. So, taking the time to really understand if your company has economic nexus in a state is really going to be critical to helping you determine if you need to collect tax there. Avalara does offer a free sales tax risk assessment. And that assessment will, in essence, ask you a few questions to really understand more about your business and the activities that you've had there. And then using that, we're able to really just provide some recommendation based on the different thresholds and the laws that we know exist within the state. Okay. In addition to just that economic, the sales activity, the states also have added an additional layer to those thresholds. So they also look at the exempt sales as well. And this is kind of a controversial piece. A lot of customers over the years have always felt that if you're selling to a reseller or if you're selling to a company that's exempt, that you don't really need to report because you have zero sales tax. Why do I need to report it? Well, the states have changed that landscape, and they do want you to report all sales, whether taxable or exempt. And from the notion of determining economic nexus thresholds, this map really illustrates those states that include exempt sales in that threshold, in that guide, in those rules to help determine if you have an economic nexus threshold. So you'll see that there are some states that still do not include it. So important to note those states. But then it gets more complicated. You have some that split it. Certain services are exempt, but not other types of goods are exempt. So again, taking the time to really do the assessment, whether it be done on yourself, on your own, or using our assessment tools, is going to be really critical to help you determine if you have economic nexus in the state. Okay. All right, Ashley, I'm going to
Yes.
turn it back to you. Time for a question.
Thanks, Ken. It's time for our second CPE poll question. So that should be on your screen now. How much annual revenue does your business generate? There's a few options and you can click submit. If you do not see this popping up on your screen, just try a quick refresh to get that up there. It won't affect the minute count for your CPE. So take a moment to answer that and we will move on to the next section.
All right, thank you, Ashley. Okay, the next next agenda item is the 5 steps to managing sales tax compliance. So we spent a bit of time understanding why sales tax matters. We have talked a bit about the notion of nexus and having a connection to a sales tax authority. And so this is just taking it a step further. So really when you think about the 5 steps to manage sales tax compliance, there are 5 pieces. One is understanding. So as we were talking before about economic nexus, and we looked at those physical nexus activities that could cause you to have nexus there. The first is really just understanding, when your business must collect and remit sales tax. So taking the time to do that assessment, do the legwork, review the tax rules, the tax laws in a given state is really critical to, really having an understanding where you have that obligation. The second piece is to get registered. So once you've made that determination, you need to go to the state and register. So simply going to the state to do that registration and getting that registration permit for sales tax. The third is calculate. So once you are registered there, it's now important that you calculate the appropriate sales tax amount. The states really want those sales tax dollars, and they want you to calculate the correct sales tax. So you need to gain an understanding of how to calculate the correct tax. If you have customers that are giving you or providing you with exemption certificates, or you have exempt sales, it's now your responsibility to track those sales. So if you're getting that certificate from the customer, storing and tracking those exemption certificates is also an important step. And then the final piece, now that you're registered, you've calculated the tax, you've collected the sales tax, it's now time to remit it. So the states want you to remit that payment directly to them once you've taken those steps. Okay. So let's break that down a little bit more here. Knowing where you collect tax, again, it really goes down to just really ensuring that you understand the business activities within your organization that may trigger nexus or may trigger that obligation to collect tax. And part of that is just staying up to date on all the sales tax laws and changes that occur, but also reviewing your business activities. So understanding, those activities that your business does, are they taxable? Are they not? Did you have a new service, as an example, that you weren't providing in the past? And then understanding, is that service now taxable or exempt in that state? So taking the time to really understand that is really a critical piece. Registering, again, you think pretty straightforward. You got an obligation to do it. You just need to get registered. Well, it's not always that simple. Each state has different processes. They may have a different form that you use. They may require you to make a payment by online, or they may ask you to send a check in. So there's all kinds of nuances with each state around, what's that process to get registered. What we do know is there are some key typical, yes, items that you do need to gather and be prepared to share when you do the registration. And those things are listed here. So types of business that you are, maybe your driver's license or social security number, the projected monthly taxable sales amount. These are all things that you need to make sure you have together when you go to do that registration. And again, just going back to that assessment period, we do offer a free economic nexus assessment for you. So if you're not sure, again, please utilize that service. It's available to you. And then the other thing to consider when you're going through the registration process is once you've done that due diligence to really understand where you have an obligation. Uh, Part of that is you're going to understand, in essence, when you think you actually hit Nexus. And in doing so, you may find that, oops, I think we hit Nexus a year ago. And you have now a prior obligation, prior exposure, potentially of tax that you have some concerns about. And that's really important to really understand that, because the way you approach that registration can be a little bit different. Some of the different states have different programs that can be utilized to really help you with either setting up some type of backfiling system to do a backfiled return. In some states, depending on the amount of exposure, they have what's known as a voluntary disclosure agreement, which is basically it gives you the ability to anonymously reach out to the state and really come clean and say, hey, here's my situation. I hit Nexus a year ago. Here's what the amount of the tax is. Will you give me some type of concession? Will you help with any penalties and interest that are related to the registration, and then, give you the guidance to move forward. So a voluntary disclosure agreement can be a really valuable tool if you have a significant amount of exposure. Okay. The next piece is calculate the correct sales tax amount. So there are over 13,000 taxing jurisdictions in the US. So that's a lot of taxing jurisdictions that you now need to know about as far as how your goods and services should be taxed in those taxing jurisdictions. As I mentioned earlier in the conversation, in my city of Seattle and in my location, where I'm located, the sales tax was 10.35, and that tax includes a state tax plus some additional local taxes there. So understanding, again, all of those different taxing jurisdictions is very important to ensure that you calculate the appropriate tax. And then, not to mention it, what the states do is they make changes, and they make changes on a regular basis. So just in 23 alone, there were over 85,000 taxability updates in the US and Canada. There's this thing called a sales tax holiday that some of you in some states may be familiar with, typically around like back to school time in August, where states will basically say there's no sales tax on certain goods for a certain period of time. And every year, those rules, those specific products, the time period, it all changes. So in 2023, there were nearly 100,000 changes related to that. So, again, every jurisdiction sets their own tax laws, their tax rules around product taxability, and within each jurisdiction, there is nuance there. Okay. So just speaking of product taxability, we always thought that this is an interesting slide because it really speaks to how things can be so different in different parts of the US. Um, just looking at the one at the top in the middle, toothbrushes and dental floss. In New York, it's taxable, but in Pennsylvania, it's exempt. So again, this is really, those product taxability laws and rules in each of those states really showing up here. Each of these states views these products in a very different way. Okay. Um, the next one over, powered drink mixes in New York. A Kool-Aid is taxable, but Tang is exempt. Again, each state in New York, within the state of New York, there is even additional nuance. So the nuances can exist within the states as well. And then candy bars. So you've got Reese's in Indiana. Reese's is taxable, and Kit Kat or Twix are not taxable. Within Indiana, they deem certain ingredients in different products as taxable versus non-taxable. So it really does vary from a product taxability standpoint. And that makes it challenging because you now have to keep track of all of those taxability rules and laws. So again, calculate the correct tax amount really involves you making sure that you understand all the different variables to ensure you get that you are collecting the most accurate sales tax. And you also want to make sure that you have a good solution in place where you can upload, really react to any of those changes. Typically, the states will give you about a month's window to let you know about a change, but sometimes it's a shorter period. So having a system that allows you to quickly make those changes is really important as well. Another thing that comes into play sometimes are just understanding the difference between bill to and ship to sourcing rules. And so again, every state has different laws and rules. In general, when you are determining sales tax, the ship to address is in general what's being utilized. There are some situations where you may need to use a bill to because either you don't have a ship to address or maybe it's a location where there's not an address today, but in general, it is ship to address that's being utilized. Okay, next, track and manage exempt sales. So because business can be exempt from paying sales tax, it's important to understand some of the different reasons that are out there. Okay, on the right here, we show a couple of the different types of scenarios, some of the different reasons why a customer might be exempt. By the way, the customer has to apply for this exemption at the state level. And so some of those reasons might be that the customer has applied for an exemption for a specific purchase or a specific need. The other type is the business is a government agency or a nonprofit organization. And then the third is that you're a reseller. That customer is a reseller, and so they don't want to pay tax because they're going to resell the product and they'll collect the tax from the consumer. Um, so there are a variety of different reasons why a customer might be exempt from paying that sales tax. If you're a seller that doesn't charge sales tax on an invoice that you normally would charge sales tax, it's important that you collect an exemption certificate. And the reason it's important is really for audit purposes. So if an auditor comes to you and God forbid you're under audit and they look at an invoice or find an invoice where they believe tax should have been collected and you didn't, they're going to ask why, and they're going to want to know, they want to see proof. And so having an exemption certificate will basically cover you, assuming it's the correct exemption certificate. But if you don't have it, then they're going to want to collect that tax, either from you or you'll need to go and collect it from your customer. So tracking and managing your exempt sales is very important. And then the other piece is just really determining how often you really are reviewing and looking at those exemptions. Um, and with that, you really should just have a process in place. So, what is your process for requesting those certificates from your customers? Um, Validating certificates. Some customers will send you, I've heard from customers I've worked with where the customer has a resale certificate and they receive a government certificate, a different type of certificate. So you need to make sure it's the correct certificate. It has to be signed. It has to have a valid date on it. So having a process where you're validating and then storing and then managing those exemptions. Some exemptions expire, for example. So it's important that you understand if an exemption expires, that you need to reach out to that client to get a new exemption certificate. Okay. All right. Remitting the sales tax to the tax authority. So again, you might think pretty straightforward. You've got the money. Let's just go ahead and pay it to the state. Um, but it can be a little bit more complex because, again, each state is dictating a process. They dictate when the payment must be made. They may have certain rules around how that payment is made. Maybe it's paper versus online. Some states have a prepayment that you're responsible for making, and then maybe you do a quarterly or an annual return. Um, there are the handling of tax notices. So if a state sends you a letter with a tax notice, you may need to react to that information. Um, so it's you really again need to understand what is the process for remitting the payment to the state. What are the rules? What are the what is the methodology of payment, etc. When it comes to remitting that payment to the state. And then again, just keeping track, as I just said, keeping track of all of that information, having a way to easily track and manage your returns is also important. So, whether you're storing them, online, if there are any, say, filing frequency changes, the state will usually send you a letter. So you'll want to store those notices and then you'll need to make the adjustments and changes to how you actually are filing. So from quarterly, say, to a monthly, as an example. So you'll need to make an adjustment. Maybe it's a different form type. There are all kinds of nuances that can occur related to that. Excuse me. And then just again, if there's anything changing in your business where you feel like there might be a different type of obligation, understanding what that is, understanding from the state's perspective what you need to do to make that obligation change. Okay, so now we're going to just kind of recap really the 5 steps to managing sales tax compliance, and really kind of speak to it as it sort of relates to some of our services here at Avalara. So number one is the where. So knowing where your business must collect and remit sales tax. So again, taking the time to do that due diligence, do that research. We can help you with that. We have our Avalara Nexus assessment tools. We have a couple of different tools. I've mentioned the economic Nexus assessment tool before, but we have some additional tools that are available to you. So contact us if you need help with really trying to understand where you need to collect and remit tax. For registrations, if you do need to register once you've made that decision or that determination that you do have an obligation, we do have a licensing team. That licensing team can help you with registering at the state. They will provide you with a questionnaire to gather some additional information, and then they will take the steps to get you registered, work with you on whatever payment is needed. And then calculate. So when you think about calculate, Avalara has a sales tax determination engine called Avatax. So with Avatax, it goes back to kind of what we talked about earlier, the who, the where, the what. Um, we're going to help you make those determinations when it comes to making a sales tax calculation. We're going to be looking at the product taxability. We're going to be looking at where your products are being shipped to, and helping you make the most accurate tax determination. So our AvaTax service is a tool that can help you from a calculate perspective. Tracking your exemption certificates. So if you are in a situation where you have exempt sales that you need to track and manage, Avalara has a service called Exemption Certificate Management. And that service is designed really to help you with not only storing your certificates, but managing those certificates. If you have a certificate that's expiring, we give you the ability to reach out to that customer using automated emails, and that will enable you to request a new copy of the certificate and store it in your exemption certificate management solution. The fifth piece is return. So again, we have a managed return service, and that enables you to outsource filing returns. We can help you with that. Okay. All right, Ashley, back to you.
Okay. It's time for our third CPE poll question that should be on your screen now. How automated are your tax compliance processes? And we have options from highly to not automated at all. So if you would like CPE for today's webinar, you need to answer 3 of the 4 poll questions and attend 50 minutes. So I will pass it back over to you, Ken.
Okay, thank you. All right, so now we're at the last topic, tips to streamline sales tax management. So, so now that we've talked about sales tax management, why is it a good idea to actually automate sales tax management? And these are just a few of the key reasons, but accuracy and efficiency. So once you have that obligation to collect tax, it's important that you are calculating the most accurate tax. And so accuracy around tax determination is really important because the states really want you to get as many of those sales tax dollars as possible. By automating, you also create efficiency, right? So now you don't have staff that have to go and look up all the tax laws, the tax rules to make determination of what the sales tax rate should be. Customer satisfaction is key. I've heard from many customers when they come to us sometimes is that, they have customers that complain to them because they didn't charge the right tax, or they charge tax when they shouldn't because they had an exemption certificate. So having a system that really gets you the most accurate tax really means that you're going to improve that customer experience overall. And all of that kind of flows into just risk management, getting the right tax determination, ensuring that you're tracking and collecting the correct exemption certificates, really reduce that risk from audit. No company wants to be under audit. So automating can really help you from a risk management perspective. And the final piece is just really business growth. By automating, you don't have to spend as much time managing sales tax compliance, and it frees up your staff to focus on, more high value type items or projects within your organization. So now I'm going to talk about just Avalara's end-to-end sales tax compliance suite. It all starts with our tax research. So Avalara Tax Research is in essence really an extensive database. It has all things that you need to know about taxes, sales tax. It breaks it down by industry. We include citations. We include very easy to understand language to really answer your questions around is your product taxable or not. Maybe you have questions around drop shipments. So it's a really great database that you'll have at your fingertips, and it also gives you access to tax researchers, and you can ask a question of a researcher, and they'll get back to you within 24 hours to really give you an answer. The next phase of it is our exemption management. So again, if you have exempt customers, it's important that you have a tool to track and manage those certificates. So with our exemption management certificate program, we give you those tools to track, store, we give you automation to make requests to those clients to get new certificates, and ultimately we keep you compliant and audit ready. And then from a tax determination perspective, we do have our AvaTax service that can help you with calculating tax and getting the most accurate tax determination. We integrate with your ERP, we integrate with e-commerce, POS systems. We actually have over 1,500 connectors available to you. And then sales tax returns, again, we have a service that you can outsource this responsibility to. So we can help you with filing those prepayments and those monthly, quarterly, and annual returns as you need them. And we guarantee that we will file accurately and on time to the reporting agency. So this just expands it, expands our offerings a bit more, from the standpoint of we can help you on the side of your purchases and on the side of your sales. So whether you need tools to help you with vendor management or customer service, we've got the tools to help you. So the first layer is, again, what I just described, our core products and services. There's a new one there called e-invoicing, which refers to VAT tax, and it's really a new system that's in place in EU countries that you'll start to hear more and more about here in the future. We do have services around that. But then we have a variety of supporting services that are available to you, from item classification and cross-border for duties, 1099, property tax. And then again, we integrate with all types of services and business applications, whether it's your ERP or CRM or POS systems. And then we also offer, excuse me, a few professional services. So if you need help with implementation, or you need help with training, or you want a more hands-on approach to any of those kinds of services, we have professional services to help you. We also have, again, our sales tax assessment tools that are available to you as well. Okay. And then for the other piece that we wanted to bring up, there is a really great service. It's called Streamline Sales Tax. And so with Streamline Sales Tax, basically 24 states got together and they decided to put together a standardized list of rules that really can be put in place for managing sales and use tax. And if you qualify, there are specific qualifications to it. But if you qualify, you get free registrations, you get free tax calculations. We also have audit assistance. And it's just a really great tool. It can really save you some money when it comes to sales tax compliance for your returns as well. And back to you, Ashley.
Yes, it's time for our fourth and final CPE question. So that is on your screen. Ken just went over a quick recap of what Avalara can provide. So if you're interested in hearing more about that, you can click yes, and we'll have someone on the team reach out to you. So while you answer that, we will move into our Q&A section. We've had a lot of great questions so far. So let's get started. First question is from Jonathan. What is the relationship between sales and use tax?
Yeah, so sales tax is traditionally, it's the best way to say it, it's really based off of items that you're selling to a consumer, whereas use tax is really related to items that maybe you're buying that are being used by your business or consumed by your business. And so in certain states, there are different rules around use tax. So if you're buying, let's say, computers for all of your employees, and you have employees all across the country, and you may not have nexus in a given state, you actually may be on the hook for use tax because you have an employee there, which means you probably should get registered there. But you're buying now a computer that's being consumed in that state. And so there's a use tax component that you're now going to be responsible for.
Okay. Next question is from Fiona. If you go over the nexus threshold in a state and you register to collect sales tax, do you have to register for the retrospective sales or just from the date of registration?
Good question. And I hate to say it, but it really does depend. Every state has different rules. So they look at every state within the threshold will provide you with a period of time that they're looking at. It could be a trailing year, the last year, could be the current year. It really can vary. So we do have a tool, and I believe Ashley will be sending that along, but it lists all of the different periods of time that are looked at for that state for that given threshold. So I think that will really help answer your question.
Okay. Yep, we can make sure that's included in the post-event resources.
Awesome.
Next question, do companies need to absorb sales tax as a cost? From my understanding, they cannot reclaim it like foreign companies can claim back VAT or value-added tax. Is that correct?
Ooh, that's one I'm kind of not comfortable answering that. It's a little bit of tax advice on that front. So I would say, we can investigate that, but I would say it's probably best to validate that with your CPA.
Okay. Next question. Do remote employees trigger physical nexus?
Remote employees can trigger physical nexus. You'll want to, again, take a look at the text, the rules around physical nexus in each of the different states. But because it's so common, it used to be that there was some more nuance around it, and now that focus has become more and more narrow today. So in most states, yes, that is the case, but I would advise that you double check and look at the state's guidelines around physical nexus just to validate and confirm.
Okay. Our next question is from Chrissy. Is sales tax based on where the item is shipped or where the item is invoiced to?
And again, it does vary by state, but in general and in most states, it's based on the ship to location. Some of the variances that you might run into, there are certain states that have different sourcing rules. So if you're, say, I think Iowa might be one, or Illinois may be one, where if you're shipping within the state, they have different sourcing rules where the sales tax is determined based on the origin address. So there are some variance, some nuance there. So it's important to understand that. Our AvaTax solution, based off of the ship from and ship to address, will help make that determination for you. So it's good to, just, make sure you understand that. But generally, it is the ship to address or where that item is being consumed. And then the other scenario that can happen is perhaps you don't have an address. Maybe it's an unincorporated location. There have been times when customers have used a bill to address. It's typically, may not be the most compliant way to go about it, but there have been scenarios where you may have to use a bill to address because that's all you have. And then the third piece is latitude and longitude. So if you have a latitude and longitude coordinate for a scenario, maybe you're shipping to a construction site, you don't have an address yet, but you have a latitude and longitude coordinate, AvaTax has the ability to make the tax determination based on that. So long-winded answer, but there's a bunch of different scenarios and nuances that can come into play. So
we have time, I think, for one more question. Does Avalara track and notify us when we hit economic nexus?
yeah, so if you are an Avalara customer utilizing a Ravatax service, on your homepage, there should be an economic nexus map that's displayed on the screen. And that screen will, in essence, light up if we see that based on your sales activity, the items that are being posted or committed in your system. If you are at 80%, it's going to light up in yellow. If you're 80% to that threshold, it will be yellow. If you are at 100% or it's beyond that, the state will light up in orange. So yes, the tools are there for you.
Okay, great. Thanks for answering those questions, Ken, and thanks for presenting today. We did have a lot of audience questions that we couldn't get to, so we'll take a look at those and see if we can respond after the webinar ends. But we are out of time, so I just have a couple reminders to close out with. If you qualified for CPE credit, you can download your certificate now in the CPE certificate engagement tool. Your certificate will also be available in a post-event email that you'll receive later today. In that post-event email, we'll include a link back to this console where you can view the on-demand recording, get the slide deck, and check out the additional resources. So thanks everyone for attending today, and this concludes our webinar.